An IPO isn't just an exit. It's a leap toward long-term growth. But what happens when the market turns and that dream valuation disappears overnight? In 2021, biotech IPOs soared. Valuations hit record highs. Investors poured in. Then suddenly, the market crashed and the excitement, it was gone. Founders were left asking, what now?
It's a tale of two companies, the haves and the have-nots. So you could already see it.
Europe's biotech sector is at the crossroads. The innovation is there. The science is strong. But capital, IPO strategies, and investor confidence, that's an entirely different story. Today's guest, Christopher Uhde, breaks down the reality of biotech finance and what it really takes to succeed in an unpredictable market.
I think some things are in your control, right? And others absolutely aren't. No one could.
Who is Christopher Uhde? He's a senior pharma and biotech equity analyst at SEB, one of Europe's leading financial institutions. He has spent years studying the biotech market, analyzing companies from AstraZeneca to microcaps. Before that, a PhD in neurodevelopmental systems biology, postdoctoral research in drug discovery. If anyone understands biotech investment, it's him.
But the long-term equity story is not simply we want a higher share price. It's that we want people to understand.
But before we dive into this episode, if you haven't subscribed yet, please take a second to do that now. It helps the show grow, reach more incredible guests, and bring you the best insights in deep tech entrepreneurship, and investing. It's free, takes 2 seconds, and makes a huge difference. Thank you a lot. So, if you want to survive in biotech, it's not just about great science. It's about communicating it right, planning for market shifts, and securing the right investors before you need them. This episode is for biotech leaders, investors, and entrepreneurs who want to navigate uncertainty, plan smarter, and build companies that last. Let's dive in. Start listening now. Christopher, let's get into the live stream and let's get into the topic.
Perfect.
The last 2 years for pharma was anything but fun. It was more fun before 2022.
Yeah.
And we were both at Bio Europe, and this is where we met. And I think the general attitude at Bio Europe was a little bit depressing. And so let's give it a little bit of a different, I would say, spin this time. And let me ask you, in 2024 and 2025, as we're looking ahead, what excites you about the biopharma space in Europe?
Yeah, I think Europe punches above its weight in terms of structural sort of inefficiencies that have held the biopharma sector back. As I heard you and the panel you were on discuss at Bio Europe, but I think the optimistic flip side of that is that it's much easier to grow quickly from a smaller base. But I mean, looking through that sort of tongue-in-cheek remark, in our view, when you look at Europe's track record of success stories of the past 10 years, the pieces are demonstrably in place to be able to replicate some of the successes that have happened firstly. So we've had, Genmab, Argenx, and Zealand that are probably the most talked about at the moment. But Calliditas deserves mention, and Ablinks was of course a bit further back, but definitely another. Then maybe somewhat more equivocal successes have been BioArctic, Morphosis, and Wilson. We've got reformulation plays like Ascendis and Camurus that are doing very well. And then we've got, of course, more mature companies that found another gear like UCB and Orion, while I think spec pharmas like Sobi, Chiesi, Almirall, and Recordati have done a really good job at essentially the roll-up story. And of course, I haven't even mentioned any UK names. I think the successful teams behind some of them have now largely moved on to new ventures. So re-entering circulation, so to speak. Secondly, I think in relatively limited reforms, actually either at the national or EU level, could actually now have a major impact on the investment climate for biotech in Europe. And let's say within that, I'm optimistic that my home in the Nordics can play an important role in propelling that forward. So I'd say we think that the sector is poised to jump. And I think thirdly, then we've seen improving conditions in Europe and the sector more broadly gather pace through 2024. And you asked, how are things looking ahead, not just back. I mean, your listeners know as well as I. It's been an unprecedentedly long winter for the sector, and now that we've started to emerge from that, but it's a tale of two companies, the haves and the have-nots. So you could already see it right in 2022 share performances. Every time news around the rate path came, right, companies with good funding or a product that was already on the market or at least adequately funded, they tended to jump pretty sharply on positive news, that the rate cuts might start soon. Whereas I think the rest tended not to move very much. Now we see IPOs have started to come back in the US. There's been an increasing number of successful placements in Europe. European VC has actually been exceeding that in the US in terms of raising capital, and actually at the same time as it's basically completely disappeared in China. Actually, we're seeing later stage private rounds starting to take off as well. Actually, just a few months ago, for example, SEB, which is my employer, helped raise 50 million euros at a 500 million euro valuation in a private placement for SmartCella. That's an unlisted Swedish platform company with. They have a technology for endovascular delivery and a couple of stem cell-based regenerative medicines for heart failure and Parkinson's. And so, I mean, things like that, where you're starting to see. I mean, that's a pretty good valuation for a company in Europe that's actually still preclinical. So yeah, I think there's definitely reasons to be optimistic.
So we have a half unicorn, basically.
Exactly. Yeah.
Still some room to grow.
Yeah.
What challenges you mentioned IPO market in the US, in Europe, and in China. What challenges do you currently see for IPOs in our sector?
Look, I mean, anytime you come out of, there's a massive hangover, right, from the party in 2020, 21, or start of 21. And anytime that happens, people are going to be cautious about getting back in. And so they're going to be cautious by being more risk averse. And that's nothing new. So I think it's the challenge will be to level up in terms of making sure you have a solid story as possible if you're a company, and get as good a team together as you can.
Let's sidestep a little bit in the conversation. Let's talk a little bit about human nature. You are an investment banker and deal a lot with people. And there is this tendency that you described, which I don't fully understand. We had really a sudden, unexpected, I would say, glorious time of biopharma globally from 2020 to 2022, where companies made a ton of money. And when I look at BioNTech, I mean, I think they got $20 billion or euros, it's pretty much the same today, on their bank account. I mean, funds before 2020 were happy when they raised 100 million to invest in biopharma. BioNTech has 20 billion, Moderna, same story, Pfizer, same story. There were a lot of smaller companies that made a lot of revenues in this time and had a lot of cash. And then suddenly, in 2022, the attitude seemed to shift from euphoria within a couple of weeks totally to depression.
Yeah.
And I really don't understand that. How can that happen? I mean, you have money on your bank accounts. You can invest. You can potentially buy other companies. You can buy new compounds. You can negotiate with universities and license something in with the amount of capital on the bank account. But suddenly people said, no, we stop investing. We don't do anything. We don't move. Who knows what comes? Do you understand what drives human nature in the investment space so that people can, or decision makers can shift from euphoria to completely being cautious from one day to the other?
Well, I mean, I'm not a macroeconomist, but obviously you have a huge amount of flows. You have patterns that have happened historically, right? And people know they're going to happen, and people could see for years. I mean, almost since I joined, it was SEB. Probably not as much at my prior employer, but almost since I joined SEB, people, I think everywhere, realized we were in a bubble. That some people already knew back a couple of years before that, and so the anticipation is there, right? They know that things are going crazy. Everyone was talking about how, I mean, it's insane right now. But that was the only way to make money, so they still kept at it, right? And so I think you had a huge number of people who knew that the end of the party was coming, but it's costly to be the first one to call time, and so then once it does happen, first of all, you get all the mega flows, right, from macro funds going out of equities and into other areas, and then within equities getting out of the sort of higher risk growth areas into the more safe areas. So it's I don't know if it's exactly rocket science. It's kind of along the same lines in a way, but it's also very well known. So.
Yeah, we have to live with it. But I think the party is not over yet. When you look at the stock markets today, except pharma, there is still some room to grow. But Nvidia, MicroStrategy, for example, Bitcoiners are back. All the hype in the artificial intelligence sector. Alphabet announced positive news in quantum computing, and the stock market is just soaring.
Yeah, no, it's true. And I mean, of course, we've had our areas like that too, right? Obesity space for sure.
Yeah, that's true.
Has definitely been a very much a momentum area that maybe is taking a bit of a breather right now.
How do you see the obesity space from your investment perspective?
Oh, well, there's a lot going on. I have to be careful how much I say because of what we're not allowed to make recommendations in public fora, but I think there's still a lot of exciting stuff going on that's new. So from an early stage investor perspective, there's more to do, but I think it's getting obviously more crowded and more challenging. And so you're going to have to, I think buying into an obesity ETF is one strategy to get exposure. But there's also an argument to be made for being more discriminating. Let's leave it at that.
Yeah, I'm not so unhappy about the Nordic companies operating in that space. So it's a good testament, again, like Biotech, for the European market. There is a lot of talent, a lot of science, and a lot of rocket science, I think, on the European market that needs yet to be uncovered. And one point that frequently pops up when people start building companies is the exit and the IPO. So my question to you, what are the biggest misconceptions about IPOs in biotech that you have experienced as an investment banker?
Yeah. No, it's a good question. I think valuation is typically the result of demand rather than science would be the first one that pops to mind. I think it's not necessarily something that everyone kind of realizes at the end of the day. But you can see it very clearly in the stock market, right? That look at all these companies that in the past 2 years had good results, but the share prices even fell let alone stayed flat, right? It was quite unusual in the grand scheme of things that you would see a share price rise on positive news. That's of course, I think, changing now. Biohaven, was it yesterday, for example, had some positive data that led to a positive share price reaction. So that was nice to see. So I think that's one thing. Then I think actually what, from our experience, I would say the investor base is more important than the valuation at the IPO itself. So getting in a good base of investors that will continue to be supportive and attract other investors is more important at the IPO itself. Valuation a few years down the line is then more crucial. So that's another one. And then I think the third that I'd mention would be that, as far as European biotech is concerned, the US market might be bigger. Sometimes the price is higher, but I think the long-term support is certainly more fleeting. And you definitely are exposed to a lot more short sellers in the US. So it's a double-edged sword, I would say.
Lucky for us that most biotech entrepreneurs don't know what short sellers are. Before we switch to the IPO, I'm a strong advocate, to be honest, for listing on the US market. So when companies approach me and say, Christian, what should we do? We started a company and now we have VC support. They need one or the other exit. Either they sell to the industry or they do an IPO. And my point always is list on the US market, you have a lot more investors there. You get higher valuations, which is very nice compared to the European market. And you have all the talent and the big pharma companies there who can take your innovation to the US market, and then you can come back to Europe, to a second listing and conquer the European market. Now, my question to you is, please talk me out of investing in the US. We are in Europe, and I should advocate for the European market. I'm missing the arguments here, so give me some.
Yeah, so, I mean, I think, look, if we talk about Europe, what are its strengths? For sure, the innovation or the science coming out of Europe, I should say, is world class. It's as good as you have in the US or anywhere else. And I think, you're going to get probably a higher rate of companies with, a single asset, single assets that do, I mean, as well probably as they do in the States. It's a different kind of scale that you have over there, right? So, it's not that it can't be done. It's just that it's more that it's a different type of mindset in general that kind of fuels things to be bigger and maybe more ambitious. I think so for a start, I'd say if it's a one product company, it's probably not necessarily better than to be in the US. And I have seen specific examples where it is definitely not made a difference to be into valuation to be in the US. It helped raise capital, perhaps. Not sure that it couldn't have been raised in European markets, but anyway. So I think it depends. And then I think so we definitely have institutional investors here who want exposure to the sector, and they want it on European markets. So there is a place for companies, without a doubt, in Europe. And I think that, of course, is much higher than average, probably in the Nordics, where I'm based. But I think those are probably some of the highlights, let's say, of fundamentally why it's also worth considering listing in Europe under the right circumstances.
Good points. I think talent, we have a lot of talent here in Europe and also a lot of great entrepreneurs operating in that space and a lot of great investors. Let's address this part of the conversation to people starting in biotech and getting exposed for the first time to terms like IPO and short sellers, and dive a little bit into these terms.
Yeah.
How would you explain an IPO to a totally new scientific entrepreneur? They understand the science. Now they're pushed by their VCs to build their company, and they say either you do an IPO or an M&A. Can you explain what an IPO is, please?
Yeah. Okay. So an IPO is just a way to raise capital and provide liquidity. That's the idea, and also it's sometimes an exit for VCs. Less so today probably than perhaps a decade or more ago. Now I guess it's more of a path toward an exit by increasing the valuation. For biotech companies in particular, but really I think it applies to any company where the vast majority of its earnings growth potential is ahead of it. An IPO tends to be a significant value inflection because the share can be marketed toward a wider array of investors. So that then you get the collective price finding mechanism that tends to be more efficient than for private companies. So I think that's the basic idea. Then of course there's a whole regulatory aspect that goes into what it means to be listed on a stock exchange. But yeah, those are sort of more boring details, I suppose.
When I expand, so the early stage is quite funny because people often start fundraising when they're running out of capital. And when I expand the thoughts towards later stages or the IPO market, which my words are usually for later stage companies, but maybe I'm wrong today, please correct me. How does the process look like for an IPO? I mean, just imagine that a company might come to you and say, look, we would like to do an IPO, exit our VCs. We have a cash runway of 3 weeks. Can you please make it happen that we get 100 million on the bank account? How does the process look like?
Yeah, if you came to me and said, we really need this in 3 weeks, I would say, all right, so you're going to have to work really fast and you're going to have to take a step here in the middle. Otherwise, it's not going to happen, right? I think, if we take a step back and say, so what are the basic categories of activities that have to happen here? So you have internal preparations, ensuring sort of NASDAQ compliance is basically the bulk of that. External preparations, so preparing a prospectus, analyst presentation to pitch to sell side analysts at the banks, and marketing pages and so on. And then of course the third is execution, which is all the investor meetings that you have to get done. So I mean the internal preparation is what really decides the speed of the process. Steps 2 and 3 can really be done in 3 to 6 months time, but that's 3 to 6 months, not weeks. So you need to come and find some sort of bridge financing to be able to get you there then.
So if I understood you right, the technical process takes 3 to 6 months when everything is prepared. What does the company need to prepare internally before even go to you? How should the organization look like?
Yeah, I mean, I think some of the big sort of organizational shifts actually tend to be around culture of communication and processes around that. You have to consider much more carefully who needs to know what. And I think then the other thing, of course, is things like that you're going to have to get an audit and make sure that your financials are IFRS or GAAP compliant and so on. So it's I think mainly things like that. And I think then for more details you'd have to go to the corporate finance team and ask them. But those are the kinds of basic processes.
So it means it needs a lot of preparation work internally to prepare the executives and the other board members to proper communication style, to also train them into quarterly reportings.
And exactly. And not just them, but I mean anyone who might interact with the market, and then of course to make sure that they keep sensitive information, market moving information to insiders only, right? So who within the team needs to know that, for example, if a trial readout is positive or negative, who needs to know that before it's announced publicly? If they don't need to know, they should definitely not know. And if they are made to know somehow, then they need to be listed as an insider in an official logbook. So that's really important, because the worst thing that can happen is you get an investigation by the finance inspection, as is what we call it in Sweden, for insider information dealing. Yeah.
Let's have a critical view on that. I mean, I'm in Vienna, and so I can a little bit joke around some topics. 20 years ago, when I worked in public companies in merger acquisition, I mean, the internet was nowhere like it is today. Social media didn't even exist back then. I mean, people used ICQ. Facebook was new in 2004. And these insider warnings, yeah, you got it, but what can you do with it? I mean, you can talk with your partner at home. I live in Vienna, so probably nobody cared about the stock market. Not many people invested. You can go to a pub round the corner and also talk with the waiters and waitresses and guests, and nobody cared because they don't invest on the stock market. So it was pretty safe to do anything. When you look at the world today in 2024, 20 years later, we have social media, and basically, I mean, anybody can post on X.com anything. Elon Musk looks at it and just publishes to the world, and you have the message out there. Isn't it a little bit more complicated today to keep the communication really streamlined and in line with the regulations?
I mean, as you say, it's the. I think it's you have compliance departments who are going to be dealing with those kinds of aspects, and as I mean, we have one, of course, and as they say, when in doubt, there is no doubt. And I think it's just about educating people in the organization that there are many ways for this to get out there, and it can cause enormous headaches or much worse. So you just can't do it.
But it means basically companies who want to be on public markets need, in principle, train everybody in the organization. I mean, it's not just top management. It goes down to everybody involved in critical studies.
Because anybody could end up sitting on something that's material at some point or other.
Yeah, definitely. I mean, when you have a clinical trial and people are working hard 2 years on getting the results down to the lab technicians, I mean, everybody's happy when the results are positive. And it's so easy today to just say, yeah, we made it, we did it. And we can post it on social media. And this would be a
yeah. Oh, that would, I have never seen that happen. But it would be a horrible thing to see.
So the point I want to make is, before people think about doing an IPO, they should really set up the organization in a way that they don't have compliance issues later down the road.
Exactly. Yeah.
Would be helpful. And then when this happens, so this is something where you probably can advise the companies and can give them contacts, but this is something they need to do themselves. And once they think they are ready for an IPO, this is then the right handover point to your team where you start doing it. Can you explain the steps that people then have to do once they really have set up everything internally? How does the entire process look like?
Well, I mean, so that's when and part of this is still then now you get into what's really like a gray area between internal and external. But making a prospectus is basically everything that you want to say to investors anywhere about why your company is an attractive investment, but also what the risks are in it, has to be in this prospectus. And it's an enormous quantity of information that goes in there. I'd say for a small company, you're probably talking about 100 pages or something. And the risk section is usually good chunk of that, and also the most sort of legalistic language and boring to read, but and generic usually. But nevertheless, so it'll talk about who your owners are, the history of the company, what the assets that the company has are, the market that the company is planning to market its products to, and why the products are differentiated, and so on. So essentially, it tells the equity story of the company. Why should anyone invest in this one versus all the other companies that are out there? Once that happens, I mean, you might get some sort of early look meetings with very focused groups of investors, where you think there's a high chance that they could become key investors in the process. We call them cornerstones or anchors in the Nordics. And then in the meantime, you'll be taking all the material in the prospectus and using that to prepare an analyst presentation, where the management team, so CEO, CFO. In the case of a biotech, you typically have a CSO, CMO. There could be other people there as well, depending on the structure of the company. A commercial team, and so on, who would be present and then telling that equity story to the analysts over. I think the shortest one I've been in is 3 hours. The longest one I've been in, it was a couple of days. So it's your chance as a company to tell your story and make sure the message you want to get out that is out there, so that because you want people to understand the company the way you do, right? You want them to see why you find it so exciting that you want to work there, and therefore why they should want to invest, because at the end of the day, it'll make them money, right? So that's what you have to do, and so you have a lot of work to make sure that is told well, and then there's a range of marketing materials around that. I get sent out once I've written a report on an IPO process to market that to investors as well. And then we move over to the sort of the execution side, which is where you have investor meetings and so on, which is also where I would then be active marketing the IPO. And then through all that, you're going to have legal that's involved every step of the way, and banks that are involved every step of the way, at least one, and usually two or more, depending on the size of the company. So I think that that's probably most of it.
How many months are these? What's the fastest that you have ever seen to run through the process and successfully?
I think so 3 months is probably the fastest. But I don't get involved, of course, in the internal stuff, right? So I don't see it until it's ready for the sort of external preparations at that point, basically, or part of the way through it. Let's say when it comes to who, I typically meet companies in some cases years before they ever IPO. Mm-hmm. So it's not usually that they're sort of brand new to me. Research is involved in vetting who a bank wants to work with, for an IPO. At least at the banks where I've worked. I imagine it's everywhere. So that's there's usually a forum for me to be able to contribute with feedback before things go very far along to the company themselves, right?
Yeah, I think it's some years usually. When I just walk through what you said, you first of all need a management team that want to be in a public company. So this is
Yes.
not everybody does wants that. Let's be honest.
No, sure, yeah, and so you'll often. It's also that you typically. I mean, you need a different type of management for a public company than you necessarily need for a private company. Which isn't to say that a private team couldn't do it, but it's a different skill set because you're meeting investors regularly who are not sophisticated, in terms of biology. They may be very sophisticated when it comes to financial markets and so on, but and then of course you're also going to meet retail investors who are not sophisticated on either score, but you don't want them to be saying something incorrect or get the wrong idea and spread that around social media, because that's of course also flies around very quickly. So that you have to be a management team that enjoys the spotlight in a different way, and is savvy about communicating to a wider range of people, and keeping the message very, very consistent and not sort of speculating too much.
I totally agree. When I look at the ideal world of an IPO, the end game is increasing the valuation to get more money into the company, have better negotiation power with banks to attract even more capital via debt instruments, get better employees, more employees, well-educated employees with more publicity on public markets, so that you can really grow the company. So this is my idealistic world, and it needs a skill set where people really enjoy explaining science to non-scientists. When I look at the private markets, most investors in private markets have a scientific background and understand the science. On public markets, if someone wants to grow the valuation at the end of the day and builds a bigger company, there is no way around communicating with retail investors, with institutional investors, and these are usually not scientists. Is this? How do you see that?
No, I mean, I think that's that captures it to a great extent. You probably get. I would be speculating too much. You can get generalist professional investors in private rounds as well, right? But they typically then, of course, have an appetite for this kind of thing, and it's not usually their first trip to the rodeo. So yeah.
I mean, when I look at my experience, most VCs, I think, have a scientific background.
Yes.
When non-VCs join around, they usually have, especially we're talking about biopharma.
Yeah.
They usually have an event that motivates them to invest in a risky area, which has nothing to do with making profits. Let's put it this way. Oncology, for example.
Well, I mean, so what we often see is that companies. It's almost desirable that I would say actually that you want to do a sort of a pre-IPO round, a crossover round, and that's when you start to get in non-VC institutional investors, and who are known quantities, let's say, or often better known quantities to the broader public markets. So and in those situations, it's often attractive if you have a mix of specialists and let's say local generalists who are well known for, they're seen as a stamp of quality.
And then you have quarterly reportings, quarterly calls.
Yes, absolutely, yeah. Exactly. All the all of those events, which are very public events, when people like me come and ask sometimes smart questions and sometimes stupid questions and sometimes cheeky questions. and you have to make sure you're giving out the same message to every single person who's listening to the equity story, whether it's on that call or afterwards or whatever. So the market gets the same story from everybody, and all the market gets that story.
You mentioned before the term consistency in messaging. What I wonder, how can you do that in biotech? I mean, biotech with all the study results and the high failure rates is anything but consistent in delivering a consistent message. How do you do that with biotechs?
Well, I mean, I don't know if I guess it depends, exactly a little bit on how you mean. I suspect. To me, it's definitely possible to be consistent in, first of all, are you pleased with the result that you have? If so, why? And you need to explain what opportunities it unlocks. Why is this an inflection point for the valuation of the company? Those things don't really change depending on who you talk to. Of course, the level of detail can change just because some people don't care about that level of detail. Specialists definitely typically will. I think the main thing is you have to plan in advance before these events. So what are we willing to say about what this means? So that we're not going to tell everyone literally exactly the same script, because they don't want all of that same script. But we want to basically, if somebody asks a question, what are we going to tell them? Because then it has to be the same for everybody. It's more, I guess, like that. So you need to plan out. So what could they possibly ask us? And if they ask us these subjects, where is our line to say, okay, that we're not going to talk about, and at least at this time.
I think that the key point here is that being a public company means a lot of selling, and it's a selling mission. And it's a different sell to business angel. It's a different story selling to VCs. It's a different story to selling to crossover funds. And maybe sometimes people become ambitious and say, I mean, Elon Musk is a nice guy, he's the richest person in the world, the wealthiest person in the world, with north of $1 trillion, I think, meanwhile, valuation. Apple is, I think, $4 trillion dollars right now. And someone might say, let's build something like that in biotech. We don't have it. At the end of the day, it means selling to people like Warren Buffett. And when I interpret Warren Buffett's investment approach, what he looks for is a management that consistently delivers plannable returns in the same size every quarter. So every quarter, the same increase in revenues, the same increase in profit, and just staying consistent. No ups and downs, no saying one quarter we doubled our revenues, and then the next quarter, and now we halved it. And the next quarter, now we tripled it. I just wonder, how do you see the possibility in biotech, or the companies that you see, which type of companies are suited for an investment style like Warren Buffett? At the end of the day, when you want to grow $1 trillion companies, it's this person.
Basically, the only ones would be for Warren Buffett. Really, none of them actually. Now, I know he has bought J&J at one time or another. But I think the first thing is that he's always said in the past that I don't invest in companies in anything I don't understand, which is a pretty good policy. But I guess once or twice he's. At least he's felt he's had a good enough grasp of the moving parts that he's been willing to take the jump. But if there's any company in our space, it would be a big pharma company. But because they are, they have the kind of stability that you would need for an investor like that. It's a completely different type of investor than the typical biopharma investor at any stage, really.
Let's talk about the biopharma investor that you experience in your career. What are the selling points to this type of investors? What do they want to see?
I mean, so let's let's say since February 2021, it's been revenue and earnings to keep it simple, right? And growth. I think so the types of investors have kind of, or at least their appetites have shifted since then. Before that, it was different. It was a different pool of investors or appetites. I think we need, so we can take a step back and say, across those two groups of investors and the two types of companies that are in there, people want to see a strong team. They want to see committed owners and savvy owners. Not necessarily the same owner, it will be both, but they want to see that. They want to see clearly defined value inflection points, including meaningful near and medium term catalysts. They want clear messaging around the risk profile. And that kind of comes back to what we were talking about. What does it mean when you have these results? And what, they need to make a judgment about the probability of success, right, of a project. And that is both on the development side, but also on the commercial side. I imagine, just from hearing the questions you're asking, that a lot of your listeners are on the development side. I think a lot of investors in public companies would say that once you've got your product approved, you're now getting to the hard part, which sounds a little bit deflating. After going through the incredible feat of getting a product approved by the FDA or EMA or whomever. And that kind of illustrates just the massive complexity of the whole thing, right? But I think, you need to have explained both of those sides of the coin. So that they have as fair an idea as possible, I think, of what they're getting into. And I would say good companies on that score are very good at giving a fair picture of what that looks like, because they believe that they're going to continue in the future, and they're going to want those investors to come back. We could probably get further into that later on. But so then the last thing I would say is, you want to see clear messaging also around the differentiation of the company's approach in general, right? I think those are the main things that you would see across any company in the space.
That makes sense. I'm always impressed how important the team is. This is, I think, at any stage of investment, have the right team for the job.
Yeah, and it's a funny thing, right? It's, I think, so what I've also heard many times is that's the single biggest predictor of success of a company, right? And I definitely believe that. I think, there's a lot to be said for committed and savvy owners as well, frankly. And I would say, so you have, specialists who will be probably more focused on the credentials and bona fides of the team itself. Generalists will probably tend to focus a little bit more on the owners as a quality stamp and so on. Because hopefully good owners are making sure that there's a good team on board as well, right? It's harder for generalists to see who is, what does it mean that, you have this credential in your background on your CV? It's obviously a different story if you're a specialist.
Yeah, I think when I look at I see two types of companies basically that I think make sense to put on public markets. Is the therapeutic companies, somebody who develops something new And in my opinion, you mentioned bringing it to the market. I think in niche indications, it's possible. But when I think about the typical biotech company, 20, 30 people, highly specialized, moving it forward, I doubt they can build a sales structure, a global sales structure to efficiently promote that. So it's a B2B sell later on. And this means for the team, in my opinion, when you look at it, you need someone who already has experience with license deals, someone who worked probably in a big pharma company and understands how the processes in big pharma work to really connect the biotech company to the big pharma company.
No, that's of course true, right? And I mean, that is typically the dream every biotech investor is dreaming when they go into a company, is that at least there should be probably a good chance of a takeout. I think in reality, it's extremely important that a team be able to look at the commercial side of things and take a serious approach to it. For one thing, well, there's two aspects to it, or three really. Number one, they might actually want to do it themselves. Look at Argenx, right? That turned out extremely well. So it can be done, and it can be done with a flair. Then you have a larger set who maybe would like to be bought out, but there isn't demand for it at the time that they actually get to the market, or before that, and so they then are stuck with a product that they wouldn't be able to sell if they don't prepare for it. And that is a terrible situation to be in. And the third is similar, right? If you are negotiating with a company and you on a takeout and you want to be bought, well, if they know that you don't have any preparations or any plans to do it yourself, they have you in a tight place. So it's, I would say that it's typically the best plan is to plan for any eventuality.
That's true. And the second type of companies, I think, which are a little bit underappreciated sometimes, are all these service companies like formulation developers, someone who's experienced in clinical development. I mean, these are perfectly suited companies for an IPO, especially in these days when revenues and earnings growth are so important.
Yeah, and also because you have, it's a different risk profile, right? It tends to be, they tend to have an edge in terms of risk diversification of their projects, or it's reformulations of existing drugs which have already been de-risked on most of the biological risks. So that makes a huge difference to investors who are trying to limit their exposure to biological risk while it's at the same time potentially enjoying the upside of the biotech space.
Yeah, the typical shovel makers. I think Lonza is doing pretty well on the stock market, public company. And there are many, many smaller companies that, just naming, it's not an endorsement from your side, but it's just to give an example, what type of companies. I mean, you see a lot of teams, successful teams, to say, okay, I mean, we can develop formulations faster than the industry, and we are first in class, and everybody needs it. And they say, why don't you grow it? Yeah, because we don't find VCs. You don't need VCs. You have revenues, and you can then later put it on a public market. How do you see these type of companies for your business?
Yeah, I mean, well, we have a number of them in the Nordics, and I cover a couple of them. I mean, one is Camurus, that has one product that's marketed, and another that's in sitting with the regulators right now, which are reformulations of known substances or approved substances, and so they have revenue, they have earnings, and they're doing a great job. And then another company is sort of more thinking along the lines of more like Lonza does, which is sort of supply of material for the developers, and then looking at a very broad range of clients across the industry, right? Or potential clients across the industry, and so that one is Nanoform in Finland, of all places. And yeah, as you say, there are quite a lot of companies that have some sort of play in the reformulation space or formulation space. And then I think, some of them have a better chance than others at actually becoming anything along the scale that Lonza has. Yeah. So yeah.
Yeah, Lonza is, of course, a different scale. Before we dive deeper into the stock market basics, let's talk about you and your journey. What does it take to get into one of the best investment banks in the Nordics and working in your field?
Oh, well, yeah. I think it depends on what kind of area you're in. I guess in my case, biotech is quite a specialized area. So normally a bank would want somebody who has financial education. In my case, I don't have that formally. I was picked up on the job. What I do have, of course, is an advanced degree in biomedical science, broadly speaking. So I think that's of course one thing. In general, they want to see. It's not such a different. You need to be able to communicate with a wide range of people effectively, and in that respect, it's not so different from being on a communication team of a public company, right? It's at the end of the day, you're selling a product to customers who are investors, and they have all kinds of experiences and strengths and backgrounds. And so you need to be able to direct, and also appetites for risk, for certain types of stories, time horizons, and so on. So you need to be able to understand what they're looking for, and help them, direct them to companies that can be interesting ideas or opportunities. And then obviously, you need to have an surprise, an analytical mindset. Yeah. So I think, that's kind of the main things, right? And of course it's, I think, relatively, it won't surprise anyone to hear that it's a relatively hardworking type of role.
You mentioned you graduated, I think, in the United Kingdom.
Yeah.
Do I remember that right? A biomedical degree. Let's repeat that. Biomedical degree. What motivated you to move from the real sciences to the financial world?
Yeah. Well, I think it kind of, it began at a very young age, because all my family are in finance.
Oh.
But yeah, I don't think it was just that I did everything my parents told me, but my father was a huge fan of biotech investing. Back in the US, this was, and I think that sort of percolated into my subconscious. So I was, I think, always interested in biology, as long as I can remember anyway. So I was, I think, open to a lot of different possibilities that involved either one or the other of those two things. But I decided I wanted to do the biology part in university. So I was at Edinburgh, and so much did I want to do the biology thing that I went to university where there's, like European universities, there's no core curriculum across a range of subjects. It was just biotechnology. But it did have a module on industry. how the industry works, and visits to different companies in the area, like Organon and Quintiles and yeah. So yeah, I mean, I was open to either academia or finance for a time, and obviously then industry as well. But there was a funny situation where we went to visit, I think it was Inveresk in Edinburgh, and they said to us, all undergrads, right, in biotechnology, you don't need an advanced degree to get high up into the leadership of a biopharma or CRO. And I, being the cheeky guy that I am, I said, so how many of you have PhDs? And everyone raised their hand. Okay, thank you very much. I got what I needed. So that, then I went to get a PhD. And I was looking around for the best lab in the world, basically for the specific, very, very specific area that I was working in, the development of the ventral midbrain. And a paper came out in Cell that dealt with a lot of the major questions in the field at the time. And I said, that's where I got to go. So that's how I ended up in Sweden. And then, the transition to finance, I think, was just, I was already thinking about what to do, how to what are the right approaches or what are the avenues available. I was quite interested in venture capital for a time, but I had, I think, an important conversation with actually Kevin Johnson, who's now at Medici. He used to be at Cambridge Antibody Technology. And everybody pitches their own book, right? So you always have to be kind of aware of that. But he said, I don't think that you can have really great success in venture if you have never had any operational experience. And you don't have the deep knowledge of what it takes to bring a company forward. I'm sure there are many people who probably some of your listeners who will vehemently disagree with that. But I think from my perspective, I've always been quite interested in having a strong fundamental understanding of how things work, and to me that really chimed. So I sort of put venture capital on the back burner, and it's kind of moved progressively further back over time. But it did make me realize I knew I needed to get a bit broader perspective, because I've been in one field for 10 years, and it's time to start to branch out and see how these things can be applied. So I thought venture capital, equity research was a really interesting way to do that, and it's a lot of fun because it's you're learning new things every day about very different things, and you need a wide range of sort of tool sets and knowledge bases, because you have to understand the science, the biology, the clinical science, the basic science, the financials, the communication and reading between the lines. So it's and then communicating yourself with people in a way that reaches them and hopefully has an impact.
I've taken two notes, two topics that I would like to dissect a little bit more, sure, which I find quite interesting what you said. I mean, the story that you mentioned that people told you don't need to be well educated to climb the corporate ladder. Maybe you did it, maybe a little bit dumb would help. And then you ask the question, it's just interpreted. I'm from Vienna, so people expect me to be unfriendly and unkind. And then you ask the question, say, how many of you don't have a PhD or have a PhD? And they say everybody. So I think it really helps, especially in Europe, to have higher education and have a broader perspective on a lot of topics in life. What I find interesting still in 2024, you mentioned it when you were talking about your education, that scientists usually don't get a financial education or a business education. You were lucky at your university that there was a little bit. In my opinion, I mean, as a scientist or as an academic, you have two career paths. One is basic research, academia, and the other one is industry. Why is there not more support for scientists to understand both worlds, basic research as an undergraduate or the industry? What's your view on that?
Oh, well, I mean, culturally among academics in Europe, for sure, there's historically been. I mean, I had a discussion with it. I when I was looking at PhD positions, and I was doing a master's in a lab, so a research master's, and I was talking to my boss at the time about how to talk about it in career in interviews. And I said, so I figured they'll ask me, so what do you want to do? And I guess I'll be kind of open-minded about whether to be in industry or academia. And she said, oh, I don't think that's a good idea. If somebody talked to me and said they were open to industry, I'd say, oh, it's just a waste of time.
Okay.
And I think there's definitely a fair bit of that. They think about, their network of scientists who they're going to work with. They're not thinking about themselves about spinning companies out. They're thinking about how will I get more papers out and in high impact journals. I think the incentive structure is such in academia in Europe that, we incentivize that and not spin outs. Really, let's say there are. I think the Nordics is a little bit special in that respect. That they have what's called lärarundantag, so the teacher's exemption that basically means that they get to own the IP from their research, and it's not the universities, which can be a double-edged sword. So universities have to kind of come up with a way to deal with that to help the academics to actually get a startup started. But anyway, that's another subject from what you're talking about a little bit.
I think this is an important point. I mean, when we look at the US market and the differences to the European market, this entrepreneurship attitude in the US is much stronger and it's much more accepted, or people are pushed towards the direction. So when you have an idea and this has market potential, go found a company, and this creates tremendous returns also for universities at the end of the day. And I think we have a little bit of a gap here in Europe.
Yeah. I mean, look, it should be obvious that if you're going to be the kind of researcher that founds companies that actually raise capital and eventually get taken out, that you're gonna be probably making it easier to justify why you should get research spending, especially as you get toward the later years of your career when it's harder. I mean, early years it's hard for everybody, right? But in the later years, you're going to be competing with people who've done that and people who are young, and I mean, in Sweden it becomes quite difficult, I think, once you're certainly past your 50s to raise funding for academic research. I think it would be different if you had a record of creating 20 companies.
Probably.
Yeah.
There's some good examples. I mean, to build on what you said with the second part of the questions towards venture capital, I mean, when you look at my career, it was in the 90s, academia, research in finance, economy. Internet was young, so I worked with Harvard, St. Gallen, University of Graz on behalf of the European Union in finding out how this new technology will shift the economy and what it means at the end of the day. And coming from business, finance, economy, I thought, well, I mean, PhD, it's something theoretical, and social sciences happen in companies and organizations. So I moved towards public companies and learned how to build companies for global players at the end of the day. And it's always the same thing. Where is the market? Where are the needs? How can we fulfill that? Do we find something that we can offer to customers? Is it a good market? Can we grow it? And this is the playbook. When I now look at the venture capital scene from 2006 onwards in Europe, I don't think that many VCs had industrial experience. So what I saw very often, my interpretation was they come from academia, start working for a fund, And that's it basically. And it's pretty much the same playbook. You put the technology into a company, and if the technology works, you can sell it. And if it doesn't work, you fold it into the next thing. When you come from a merger acquisition background from a public company, you have a different playbook. Because you also, okay, how can you grow it? How can you develop that into a business, which means in-license more or find something that you can mold it and hire more people. Why do, I mean, maybe I see the wrong way. You talk to much more people probably than I did. What type of venture capitalists do you see in Europe? Do they have a business background, or are they more from the scientific and pure investment background coming?
I see a mix. I see people who have an academic background. I see people who have a finance background, and I see people who have been involved in running companies. And a lot of the funds that I think of locally are a mix of that, even small or large. Not all of them. So some of them may have a heavier weight towards of people. But let's say they may have been in consulting, working with industry as well, of course. But I think in general, the vast majority of the funds I see, it's a bit of a broader mix than what you're describing. But then, it may be that they've been in bigger companies as well, rather than small ones, and that's a totally different environment as well. But I'd say it's a bit of a mix.
I still see some differences between the European and the US market. I mean, the US market is much bigger, and venture capital plays a significant role in the US, but also plays a significant role here in Europe to get companies towards public markets and grow the economy as a whole. What are we missing in Europe? What do we need more to close the difference or the gap to the US?
Yeah, I mean, I guess you were commenting, I think, on LinkedIn earlier or yesterday, maybe it was even as recently as that, about it was there's this culture in Europe, in Europe, of not giving options to a broad range of employees in startups. Just the C-suite, basically, if that. And that contrasts with the US, of course. And I think that's an excellent point. I've actually, I've often heard European investors ask company management, so why haven't you bought shares? In the US, they're usually asking, so have you given them enough options to keep them incentivized? So I think that's definitely a distinction that is probably meaningful. But I think that the other sort of most obvious things that come to my mind are sort of ways to, coming back to what we were talking about, ways to incentivize researchers to spin out. And I think one thing that would be relatively simple to do, and doesn't necessarily have to be implemented across Europe, but I'm sure it would benefit Europe as a whole as well, would be just to allocate a greater share of public research funding to investigators with a track record of patenting technology and spinning out companies. And maybe sort of, you could say, like, have a sort of a bonus element of it in terms of research fund. You keep part of the research funding that's allocated back until they have spun something out, and that unlocks more. For example, that would be one, I think, relatively straightforward thing that Sweden could implement, or you have institutions that are philanthropic in all of these different countries, including in Sweden, where they could also make that kind of a call that would just kind of help contribute to this general pursuit of innovation, not just invention or discovery. And then I think another way to sort of ease access to public capital within the EU would be, and again, it could be on the national level or the EU-wide level, that would be sort of to mandate that basically, regardless of the location of listing within Europe, the European pension funds would consider locally domiciled small and mid-cap biotech equally. So if they're listed in one year, at least within Europe, right? If they're listed here somewhere on the continent, that's good enough, and then they're as valid an investment as anything else.
Yeah, I couldn't agree more. Thanks for pointing at the post from yesterday. I mean, this is a question I frequently ask when I talk with people from the United States. I was born in the 70s, grew up in the 80s, studied in the 90s, and I always had the feeling that the US market and Europe are at par, so on the same level, basically. So you have European companies, US companies, and looking on the public markets, they seemed pretty much. You always had the European counterpart to the US company. When I look today on the stock market, just ask you one question. How many $1 trillion companies do we have in Europe?
Yeah, exactly. No, and it's a little depressing when they talk about the Magnificent Seven and it's basically luxury companies here. And then, of course, Novo, which is a true innovator. So at least we have one.
Novo is an outlier, but all the others are. This is on Nasdaq. And I usually ask the guys from Silicon Valley or from California, what's the difference? And these are the two things that they frequently bring up. One thing is failure. I mean, when a company failed and people are looking for a new job and they work in the startup field, they get 5 new offers the next day, and they said, "Cool, you worked in a startup. You understand what you should not do. Now, please come to us." And in Europe, it's your company failed. You must be a failure. So shame on you. Go away. And the second thing is participation, and this seems to be also, I think, last year I had. I have to look it up. I had the conversation with someone from the biotech field from San Diego, and he's running Biocom California, Joe Panetta. And he said employee participation. It's common in the United States that people get tons of stock options down to the lab technicians. It's not only the top management, everybody. Exactly. And they know when this company succeeds, I can do whatever I want with my life. I can surf, I can sail, I can sit on the beach, or I can start 5 new companies. But I get enough money from that. And I think these two things we don't have in Europe.
Yeah. No, I agree. And that's, I don't think, and more needs to be said, really. It's pretty straightforward. And those are things that can be done at kind of a grassroots level, right? Very much so, right? So it's, owners take note.
Yeah, that's true. Let's go back to your bank.
Sure.
The SEB. What's the right?
SEB. Yeah. So Skandinaviska Enskilda Banken. So
okay, for me as an Austrian, SEB is much easier. So you're basically the go-to bank in the Nordics for biopharma IPO. Why is your bank the top choice?
Well, we're one of them, right? I mean, I think why are we known? I think we're known for our deep research on companies and markets in the sector, and occasionally bold recommendations. I think so on the research side, just I could point to some of the things that we do. We have a global sector report, for example, which is we're the only Nordic bank that does that has a special focus, of course, on the Nordics. So trying to put them in context, but looking top down instead of just bottom up. And I think if you look at it, right, and include multilateral trading platforms in addition to non-regulated markets, there are a little over 200 companies listed in Sweden across healthcare, and another 60 or so in the rest of the Nordics, and about 2/5 of that are biotechs, and obviously the vast majority, of course, have no chance of becoming profitable, but it's indicative of the relative ease of attracting capital. And then I think, if you look at our track record, I don't have to make anything up, actually, which is nice in these situations, to toot my own horn. There's a periodical called Affärsvärlden, so Business World, that can speak for me, and they did an analysis of IPOs since 2021, and showed that most banks in the Nordics IPOs performed very poorly since then. And they actually highlighted our main competitor in that list. Only 2 banks had run IPOs that in aggregate had performed positively since 2021, and SEB was the only big one. So I think I think those are the kind of 2 things I would say. We do deeper and broader research, and sort of in terms of putting a global perspective on it, and we strive to do quality IPOs. And I think the other thing I would say is that we are the largest Nordic bank. We're one of the biggest in Europe, and with that comes a very strong global organization. So we have a really good ECM reach. So equity capital markets team that has a good reach with a broad range of investors.
You mentioned 2,000 employees in the material you've sent me. Is this,
I think it's actually. I think it's 17,000 employees.
17? Oh, then I got it wrong. 17,000.
I might have mistyped that. Yeah.
So, no,
because we're in. I mean, we have commercial banking as well, right?
So you have really a wide reach globally to connect companies who.
I mean, we're a full service bank, so we have but with the core business being in the Nordics. But yeah, we have private banking, for example, which is also, of course, a helpful thing to have in an IPO situation. We have, the investment banking, obviously, and corporate banking. So we work with AstraZeneca and Novos of the world, or at least of Europe, and. So I think, and then we're one of the largest commercial banks in the Nordics too.
No, a huge number of employees is good to have for companies who want to do an IPO. I mean, you got to get your message out, and the more people you have that potentially can talk about the story and support the story, the better it is at the end of the day for the company that goes public. Before we dive into market volatility, you mentioned it before. I mean, comparing 2021 with 2024 and taking that as a measure of how successful IPOs were when you go from the market peak to the market low. Yeah, I mean, but before I ask that, when I look at continental Europe, everything south of the Nordics, I think it's really rare that biotech companies do an IPO. And when I look at the Nordics, it seems to be the norm. I mean, you found a company, you go public. Why is there such a difference between continental Europe and the Nordics when we talk about IPOs?
I mean, I think it's kind of coming back a little bit to this Lehrer und den Tag to begin with. This fact that researchers own their own IP. So there's a bit more of an incentive to actually start your own startup. And then, for example, part of them has been that they then don't exactly know what to do because they've never started a startup before, and it's not as common as in the US. It's less of a network among the academics to kind of go and talk to about how to do it. But for example, my university, Karolinska, they set up an organization to then say, well, okay, we will help you with that, an innovation incubator, and of course we'll get then a cut of the IP, and so then it makes it easier. But I think the history of it, of course, begins with Novo and Astra, as well as Lundbeck, Pharmacia, but we now have a number of success stories in relatively recent years, including Genmab, Sobi out of the ashes of Pharmacia, or what was left of it when after Pfizer was through with them, and Camurus, and I think it's safe to say Zealand is kind of well its way, and then of course there have been setbacks. The big one in the noughties was active biotech. More recently, we had oncopeptides and orphozymes. Others like Hansa have kind of overcome the regulatory bar to face hurdles of commercialization and are working their way through that. But I think it's a history of innovation in science and medicine, and then sort of success stories along the way. And when those stories come to a conclusion, then there's a churn of the people back into the ecosystem and starting new ones. And then, of course, there's the advantages of the Stockholm stock market, which is sort of more broad than just biotech, right? So,
why are IPOs in the Nordics so attractive for investors generally? I mean, they need to put money into companies, and why is this so different from the attitude?
Yeah, I mean, well, let's say, I mean, the relative advantages compared to other markets, right? I think it's just that you have, I mean, there's an FT article that is, I think, was really good at illustrating what it was. It's called "How Sweden's Stock Market Became the Envy of Europe," and they were saying, Sweden's got the deepest capital markets in Europe, including the UK, as a percent of GDP. Only the UK has actually listed more companies over the past 10 years, and Sweden has had more than France, Germany, the Netherlands, and Spain combined, 501. They said, a big proportion of funds are small cap or mid cap, and that size band is very popular amongst Swedish private banking clients. Mm-hmm. Then you have a high share of pension funds investments that are domestic equities. And even insurers are in they're about 50% of assets are in equities, or I guess it was in 2022. So, maybe that's shifted a little bit, but, it's been kind of hovering around that kind of number for a little while. And then, of course, there's a strong retail cohort, which is another double-edged sword, but for a biotech. But I think in contrast to the rest of Europe, for sure. Yeah, and all of that has its origins in reforms that Sweden did in the 1980s. So,
I mean, this is, I think, a nice bridge to the market volatility, because at the end of the day, one aspect of going public is that you want to have a higher valuation in 5 years than you have now, and valuation only can go up if there is anybody on the market buying, or at least being interested in what's listed on the stock market.
Yeah.
And when you look at continental Europe, I think for biotechs, it's sometimes really hard to find those retail investors who are interested. And it seems to be different in the Nordics. So there seem to be this kind of investors who really look at the sector.
Yeah, I mean, for sure. We have investors who are frequently anchor investors who, they're not necessarily formally specialists, but they've done so many biotechs that they, almost are. They've seen a lot. So yeah, that's definitely a factor. Yeah.
Yeah, we don't have that here, unfortunately. Let's switch over to market volatility. I mean, private companies are fairly easy when it comes to market valuation, or when it comes to valuation. You do a seed round, you get 3 million euros for, let's just make up numbers, 10 million, and your valuation is 10 million. Before, your valuation was 0. So suddenly you got incredibly wealthy from one day to the other. So the shares were worth nothing to something. Then you go to a Series A, and let's just say you get another 10 million at a valuation of 50, and you can be proud because you pushed the valuation from 10 million, just ignore pre and post money, 10 million to 50 million. Then you do a Series B, you get 100 million for, I think you brought the example, 50 million for 500 million, and you had another 5x, and it's always a step up. You say, okay, 10 million, 50 million, 500 million, it's always up, 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 up.
Yeah.
Then comes the IPO. And for those listed in 2021, you probably with a 500 million valuation, you can go up to 5 billion or something to just stay in the picture. In 2021, and you think, I'm the super coolest guy. And 2 years later, you are at 100 million valuation. So what's your advice to biotech executives who experience that roller coaster?
Well, now we're coming to the end of it, so they'll be having more time to reflect on their own experience. But I think, to those who haven't been through it and are hoping to be, there's a good chance you will be then at some point in the next 10 years or so. I think some things are in your control, right? And others absolutely aren't. No one could predict COVID, right? There were some people who predicted there would be a pandemic at some point, but these kind of predictions are generally very vague and about timing and severity. So it's, I think generally the best strategy is to try to be ambitious, but be sure to underpromise and overdeliver. And it sounds so simple. It's really quite a few who actually manage to do it, or I should say, just a few who manage to do it. It's easier said than done. I've never been on the inside before, so I'm not sure exactly what the winning formula is, but I think it certainly must involve setting significantly more ambitious, but still definitely achievable targets internally, right? So that you then say, okay, we're going to have something a little bit less ambitious, but still hopefully ambitious for the outside. And because if you don't have a realistic target internally, you're never going to have a realistic target externally either. So yeah, then I guess, beyond that, I could recite truisms, right? Like be sure to raise capital when you can rather than waiting until you need to. Obviously, don't overestimate your own assets value. But again, it's easier said than done, right? Especially because it's not fixed over time. It's demand, not science, that determines the valuation. But that's the problem, right? Because then when demand dissipates, your expectations were too high. You probably turned down an offer that was you will wish for the next several years or maybe forever that you had accepted. I'd say then the next is spend cash judiciously. You should make sure you have enough cash to get past the next major inflection point in a scenario in which you're not able to raise further capital before you get there. Speaking of raising when you can, it reminds me of some situations that I've been exposed to, let's say, over the years. For example, when the timing of a capital raise was maybe unusual, like in the month or so before a PDUFA date, it's good to be aware of how things are viewed from the outside, right? Inevitably, in a situation like that, all the outsiders who don't know all the reasons behind why you do this are going to start speculating that bad news is coming, that the company doesn't believe a good outcome's likely. It's Occam's razor, right? Why else would anyone raise capital before such a major value inflection? It's the obvious question to ask. And that's how people will, of course, see it. Of course, there may be very good reasons for actually doing the raise then. But if they're not communicated and communicated convincingly, people will assume the simplest explanation, which is usually to assume the worst. And that then brings me to my next point, which is take the time to explain your case to the market. I've seen companies of a range of sizes. Usually in pharma, they know that they have to do this, so they actually do it. But big pharma, I mean. But in everything below that, many companies do not actually take the time to explain to the market. It's the most complicated sector there is. It's easy to fall into the trap that the average savviness of your investors is savvier than it is, and that's probably especially critical when it comes to M&A, changes in strategy, and changes in the capital structure. So if you get the sense from speaking with sell-side analysts, for example, that they're not really getting the answers they're after, maybe they keep, different analysts keep asking around the same subject, maybe it's time to, a light should go off that you should consider a follow-up call to really say, let's this is important. Let's make sure you are all understanding this. Then I think, So yeah, I think that covers a lot of it.
Yeah, good points. I mean, there are two things I would like to dissect a little bit more. Communication, I mean, public markets is not anonymous. So it's basically there are people behind it. And when I understood your advice right, it means communicate directly with people, especially with the critical opinion leaders on the market. So directly face to face, one-on-one. It's not just selling to an anonymous market. It's still, even if it's a public market, it's still people communicating to people.
Yeah, face to face is definitely good. Failing that, calls are excellent. And nowadays, many bigger companies do Zoom calls to make sure that you get to see management while they're doing the event. Yeah, so.
I mean, the communication, you mentioned communication often. So it's a fairly important point. And I think the playbook 20 years ago was pretty much don't overpromise, don't underdeliver, as you said, have a positive communication, have a positive news flow, no drama, be consistent.
We could talk about that being positive. I mean, it's interesting because now you have all the analytics, right? The AI that actually go and quantify everything that's positive or negative and highlight in the transcripts what was positive or negative or what it perceived to be, at least, right? Yeah. So the flip side to that is that you end up getting companies that big pharma is big pharmas that aren't doing so well is the classic example of this today, where they just use ever more superlatives and even hyperbole. Sometimes it sounds like in all their communication, and it just sounds so crap. You don't. If you follow them for very long, you'll realize that this is just not. It doesn't work. It's not. No, their share prices aren't higher just because they communicate by saying this is just the most spectacular data. We were really, really floored with how amazing it was. People see through that. So I think there's something to be said for being realistic and honest as well. It's very hard, I think, to do because there's going to be some kind of a balance at the end of the day, and you don't want to be honest in a way that pulls the rug out from underneath your long-term equity story. But the long-term equity story is not simply we want a higher share price. It's that we want people to understand what we're doing now and why it's important for the future. And that will then lead to a higher valuation over the long term. And when they know that this is your style, they're gonna realize that, and they'll say, okay, so they're usually pretty down to earth, and you can trust them. That's, I think, what's really key to getting committed long-term investors in a startup or an early stage public company.
I think this is good points that you mentioned. Artificial intelligence was one. I didn't think about that. I want to make another point, building on what you said. I think there is a shift in the way people communicate. It's much more entertaining these days, especially on the US market. When I think about two people, Elon Musk, for example, I think with the Twitter acquisition, I imagine a European CEO of a public company the size of Tesla carrying a sink into an office, posting that on social media and say, let that sink in. It was during the Twitter acquisition. It's pure entertainment. And they thought, okay, it's Elon Musk. But it seems to work. I mean, Tesla has a great valuation again. But then is also Jensen Huang. In one of his recent interviews that he had on stage interviews, he said something where I thought, how can you say that as a CEO? I said, he was asked something like, do you fire people? And he said, no, I don't fire people. I said, well, okay, this is politically correct and it fits the US market. And then was a pause and he said, because I tortured them to greatness. And this is something I was like, what is going on here? How do you see the shift in communication of these leadership personalities that we see on the US market? Is this really a shift that's happening right now, or is it?
I mean, it's probably, it's the what do you call it? Vulgarization of investment, of the investment world, the financial world. When you get it happens, of course, first in these companies that are big growth stocks that are massive valuations that can, attract a lot of attention from retail investors who don't understand anything, right? It will not work as well with companies that are smaller or mid-sized, and they are gimmicks at the end of the day, right? So, and then of course, different places have different styles, but if something like that would not not be well received by the Nordic investment community, certainly in any company that I can think of in the Nordics. Certainly
what's the expectation in the Nordics when it comes to communication style? But
they are relatively lower key, right?
Mm.
It's people would see this kind of American crassness or brashness as unappealing, and kind of showing a lack of seriousness, and I think they would see it as a red flag generally. There are different flavors of that of American styles of communication, and I'm American too, right? So what you're talking about, some very specific examples. Swedes are also different, and so some are will find certain things more irritating than others. I have never talked to anybody about the Elon Musk sync story, so I don't know what they thought about that. But people talk about Tesla a lot. So
I think the interesting thing with communication is that people tend to copy their idols. And when you look on social media these days, X is full with Elon Musk quotes. LinkedIn is more on Jensen Huang, Jeff Bezos, and people just tend to copy what they see online. And at the end of the day, your advice is always know your market, know to whom you are going to sell, and adopt the appropriate communication style that fits with your audience.
Yeah, I mean, you have to take it well into consideration. Then, you have to be true to yourself to some extent. But hopefully being true to yourself also means, that you spend a certain amount of time doing honest introspection.
That's a good point. That's an important point. I think many companies might be motivated now to do an IPO and hear a lot about this nice valuation, and we're coming out of the valley also in pharma. The market is soaring, and I assume that you also have to turn down opportunities. What are your criteria to assess whether a company is fit for an IPO? Because at the end of the day, also your bank lives from success stories, so it doesn't really help to create one failure story after the other. You need the successes at the end of the day that are perfectly performed an IPO and got a good valuation. What are your criteria to assess a company?
No, and it's actually one of the things I really love about working at SEB is that we really care about working with quality companies, and we want long-term relationships with the companies that we work with. We're not after doing just the quick deal, and that's then nice if they come back, but we just want to get as much out of this deal as we can. That's not us at all, and it kind of goes back to our founding, that it's in the 1860s by one of the Wallenberries, Oscar Wallenberry, and it's so I think what do we look for is maybe a little different than maybe some of our competitors are always looking for, inevitably, being a different organization. But I think for us, it's at the end of the day, it's very individual with respect to the equity story, right? What kind of a company is ready to go public or not? I think in general, it's nice to see one project that's phase 3 ready, but a variety of factors can make that more or less important, including, for example, the extent to which the mechanism of action has been validated, or how well understood the molecule is, the size of the portfolio that you have. And of course, there it's important that people feel that you have the bandwidth to manage whatever size of portfolio you have. They want to make sure that you are focused enough. I think, and then of course the expected time and the capital that's required to get to the market, and obviously the team's track record and the ownership. It's, for a company like a biotech that is going to need to raise capital time and again, you want to see owners who are, you committed to investing in it again in the future, and also who are willing to support it in the sense that they're happy to leave some value on the table for others. Yeah, I mean, I think it's probably especially difficult for generalist investors to kind of appreciate how important that is if they own a company like this early on. But for sure, there are plenty of VCs who could do with a reminder as well. And then I think good news flow, right? That's really important to retain investor attention and hence support the share price up until the next major inflection. Yeah. So and then of course it goes about saying really, but the prevailing market conditions, right, are always something that have to be taken into consideration. Yeah. On the other hand, I think, it's what do we look for when we're assessing whether a company is ready to go public, right? It's pretty straightforward and uniform with respect to sort of the financial regulations and on a regulated market, right? Due diligence, full audit, prospectus, meeting regulatory compliance in general, that stuff. Yeah.
Yeah, a lot of work to do. A lot of work to do at the end of the day. And let's look a bit ahead. In the last 15 minutes, time flies. Time literally flies. It's amazing. Let's look ahead into the future. I mean, we had, you called it pharma winter, a biopharma winter.
Yeah.
What is your bank's estimation looking into the next 5 years? How do you see the biopharma sector in Europe evolve and develop, if you can look into your crystal ball?
Well, look, I think we've come out of a very, or we're still coming out of a very, very tough period. But usually that means that we're likely to be ready for some good things, right? And barring some near-term shock that would set things back for another 6 months or a year, right? But there's appetite now. At the end of the day, rates are coming down, and as long as policymakers don't make any big mistakes on monetary policy, I think that's going to be the main factor here that drives a rejuvenation of the industry by increasing investment on both the public side and of course on the private side. We've seen it already that the VCs are increasingly raising a lot of money, and we're seeing mega rounds and so on. So I think that's Then does it last for 5 years? Hopefully, we'll see. Harder to say. I think it depends on how loose we are with money again. I guess the good thing here, of course, is that at this point, people who have been in the industry for a little while will know that it's really important to be prudent with spending. So hopefully won't be too profligate.
Yeah, you never know when the market conditions change back again.
Yeah.
2022, 2021 was a stark reminder to that. Looking at the European biotech sector and compare it with the US and China, and also, I mean, what Saudi Arabia is doing is pretty amazing. This is an ecosystem on the move. I heard that a lot of funds are set up. I've heard of $1 trillion investments in Saudi Arabia, not only in biotech but also in other deep tech areas.
Yeah.
How can we position, in your opinion, the European biotech sector in this global game? I mean, it will stay a global game, in my opinion.
Oh yeah, of course it will. That being said, I think what's happening in China right now illustrates the challenges of top-down leadership of the economy, and that is sure to be a factor at play in Saudi Arabia. And so I think you'll have investors who, global investors who realize that and will be looking for kind of more sort of stable environments. It'll be a balance, right? At the end of the day, people will follow the money. The money will create some opportunities, obviously, that wouldn't be otherwise. So yeah, Europe will have to kind of live with that and work around it. But again, if more money usually means that there's more opportunities everywhere, and I don't think that's going to be different for Europe. That they would for some reason be excluded. It's just about making sure that we invest in good things as much as possible, and that's the game everyone's playing at. At the end of the day, the sector is growing. It's just that it hadn't grown as quickly as in some other places, and that growth fuels new growth, and hopefully, well, yeah. I mean, at least we're starting from a smaller base, like we started off with in this discussion.
Yeah, 2020 was also an outlier time for biopharma with the sudden pandemic and sudden flow of capital into the area. You mentioned before this top-down leadership. I mean, when I look back at the prosperity of the last 30 years, my personal interpretation is that one of the contributing factor was globalization and a rather a loose policy towards the economy. Let's just let them do the things. And in a dynamic and open and global world, this self-organization can happen very quickly on the private sector when there is only little regulation. And you mentioned before that we have now what it looks like the revival of top-down leadership, like in China or also Saudi Arabia, which is pretty amazing because when I look in history, every time we tried to design something top-down, it hasn't looked like it can survive for a very long time. When we look at these two different approaches, now we have Trump in the United States, which seem to be more a little bit respecting private freedom and more privacy rights. We have, but also the very successful model in China, which, I mean, China is not a developing country anymore. All the time when you look at the big cities, it's doing extremely well. Where do you see the balance?
Here to stay, right? It's, I don't mean to sound glib. I just, it's more that, there's a place for a lot of different models out there. At the end of the day, when you have a lot of people with ideas, as long as they get to a chance to execute on those ideas, there's opportunity in many places, and that's not going to change. So then I think all of them have something to offer. And the U.S. obviously has some great core strengths that are the envy of the world, and certainly from a markets perspective, and so I think they will continue to be a leader in biotech, and then we'll probably be a little bit more uncertain in China, and that of course means that the risk in biotech is going to be higher. They've been smart in that they are trying to build an industry, and they do it by replicating what we do in the West. That the mechanisms are typically copy me too's, and the market is designed to allow that, right? When you look at what's gotten super exciting, all these things are coming out of China. Well, the oral GLP-1s, yeah, they weren't discovered in China. IO 2.0, IO biospecifics, right? I mean, all those mechanisms are from somewhere else. They just decided that it makes sense to give it a go at putting them on the same molecule, and lo and behold, yeah, it works amazingly. But the underlying kind of work in that was done elsewhere. So I think, to me, the question is, will they be able to find a new leg where they really start to invent, new science rather than finding a way to execute extremely, extremely well on things that have been done elsewhere.
Yeah, but for entrepreneurs, to wrap it up in the last 4 minutes, it means that the world now is global, it's open, they can go anywhere they want, even to China, Saudi Arabia. It's easy, it's accessible, it's marketed on the internet. But how would you position Europe for entrepreneurs and investors? Why should they stay and invest in Europe?
Yeah, because at the end of the day, we have fantastic science, and we have people who have been doing it with increasing success already, and we have investor pools that are increasingly welcome to biotech, cyclical aspects aside, right? And I think the Nordics is really well positioned in that. I mean, they've been punching above their weight in biopharma and helped by the Stockholm public equities market in particular, and to some extent spin out incentives for researchers. So I think we're at a place where we're actually starting to see more platform companies emerge in the Nordics as well, right? Which is really exciting. Sorry.
No, it's cool because it's great potential. It's
exactly, yeah, and I think then. Yeah, so I mean the actually we're even starting to see increasing interest from non-Swedish domiciled companies, and not even just that, but non-listed Nordic companies. I guess for the past several years we've been getting interest, before the downturn, more interest from non-Nordic companies in listing in the Nordics, and it seems to be coming back. So I think that's it's also probably more achievable in the near to medium term to succeed at doing that, which would be really interesting to see a sort of financial capital for Europe emerge. Yeah, so.
I think it would be a good thing for Europe to have a more integrated structure across Europe where people work together. My final two questions in the last 2 minutes. Let me first start with the first one. How do you see your role and your bank's role in shaping the future of biotech in the coming years?
Yeah, well, I mean, I think it's easier to start with the bank perspective here, which is that because it's obviously a more impactful player as a whole, and our sort of our mantra is that we want to shape the world positively through responsible deployment of advice and capital. Today and for generations to come. That's the SEB mantra. And so sustainability is a big part of that, and innovation is a big part of that. And I think that's why we're very focused on the biopharma is a core area of focus for us. And so I think our track record gives us the platform to be able to help companies get to a point where they can generate the kinds of returns that a biotech is supposed to give back. And then my role specifically, well, I'm having a lot of fun seeing a lot of great science and medicine, and I look forward to continuing to get that exposure and being able to promote it to investors, to give them ideas about what will generate them returns, and to help companies meet the investors, but also kind of give them guidance on at least what I see as interesting scientific avenues for exploration, and important things to think about when it comes to talking to the markets, and yeah. So that's I guess how I hope to see things continue to go in the future.
Final question for those type of listeners who judge the book by the cover and start with looking at the first 5 minutes and the last 5 minutes and just skip to the end and say, no way, I'm going to listen for 2 hours. What is the one key takeaway you want the listeners to remember from this conversation?
No, I mean, I think it would be that Europe has a fantastic base of things, of science and medicine to offer. And a fantastic talent base that is definitely underappreciated and poised, I think, as an ecosystem to expand quite quickly in the coming years now, with as we emerge from this winter. And I'm looking forward to seeing how the Nordics and SEB in particular can contribute to helping that bloom.
Christopher, thank you very much for this engaging conversation and your positive words. It's good to get a positive spin again on at the end of the winter and looking forward into spring. Let's stay in touch, and let's see in a year or so how the ecosystem developed and evolved.
Thank you very much for inviting me to be here. It was a great pleasure.
It was a great pleasure for me too. Have a great afternoon. See you soon. Bye-bye. Biotech isn't just about breakthrough science. It's about strategy, trust, and long-term vision. Today, Christopher Uhde showed us why valuations aren't about science alone, why the right investors matter more than timing, and why companies that communicate well win in the long run. The biotech market is unpredictable. IPOs rise and fall. Investors shift focus. But the companies that thrive, they plan ahead. They raise capital before they need it. They build trust, not just hype. If this episode gave you insight, inspiration, or a new perspective, here is how you can help. Subscribe, like, and leave a comment. It's a small token of appreciation, but it has a huge ripple effect. Every subscription, every comment, and every share helps grow the show. It brings in more top-tier guests, deeper insights, and the conversations that help you stay ahead. Right now, we are in the global top 10%. Let's push for the top 1% together. The future of biotech belongs to those who prepare, those who adapt, and those who never stop learning. Keep questioning, keep building, and keep pushing forward. See you in the next episode. Until then, stay bold, stay curious, and hit that subscribe button.